When we speak to business owners about selling their business, very often they say, I don't want to sell. I want to run this thing forever. I don't want to let go of control. I don't want to hand over the reins. I just want to stay in this because I enjoy it. And if I die at my desk, so be it. And to that, we say, go for it. Just make sure you have the right insurance policies. Today, I'm joined by my guest, Geoff Sokol, wealth advisor at GTRIA, that's Registered Investment Advisory. Geoff, welcome to the show.
Thank you, Tim. Glad to be here.
Yeah, so this topic of, should a business owner sell? And just to give a little preface here, we do a lot of exit planning, we do a lot of succession planning. So when we're in the conversation early on, there's usually trepidation from the business owner. And it's
hmm
natural because they spend so much of their time building this thing. It's their baby. They love it so much. So when we start saying, hey, well, let's get ready for the exit or start planning for succession, their first reaction is, I'm not ready yet, or why do I have to sell? I love it so much. Can I just stay in the business and run it indefinitely? And you can't run it indefinitely. 100% of business owners will exit, but there are things that you can do. There's policies that you can put in place where if you do want to run it to your dying day, then you should have life insurance policies. There's other things that you can do that would allow you to stay in the business. And I will offer an anecdote, which is my CPA, the classic CPA. He's about 90 years old, and he said, Tim, I want to die at my desk. And I said, great. Like, legitimately, he wanted to die at his desk. So I said, okay, that's fine. At least thank you for telling me. His son works in the business, so eventually his son will take over. But I was like, hey, that's admirable that you know thyself. So what do you say to these business owners that just want to stay in it and just run it indefinitely?
I love it. I love it. My dad is the same way. So I think this gets lost a little bit. Like, we're not, you and I and our company, broadly speaking, we're not like the door-to-door salesman type where we're hammers, so everything looks like a nail.
Yeah.
A lot of us were entrepreneurs from our backgrounds, or we've been owner operators ourselves, or we've worked in private equity. So we're looking at this now, understanding all the tools and advanced planning strategies that are available. This quote unquote this financialization of everything.
Hmm.
Like, if you design these policies, you're going to benefit from them one of several different ways. It's not just like it used to be as like a coin flip type of scenario. Like, if I die, I get paid out. If I live too long, I don't make any money. Now there's living benefits to these policies, or to establishing a trust that give you versatility, optionality, flexibility, that it makes it worthwhile to do these things, whether you live, die, stay, exit, sell, minority deal, whatever it is. So just knowing that there's all sorts of different ways to do this and to design where you're automatically going to have a beneficial outcome one way or the other. I think starting there and then having the conversations and figuring out what you want to do makes a lot of sense. Not doing it, that's when you get into the situation that, that accountant dies one day. I hope it's not during tax season. What am I going to do?
Exactly. Well, okay, so let's also talk about business partnerships,
hmm
right? A lot of businesses are set up as partnerships, and maybe it's multiple partners that got together to form something. You can actually take out business owner policies on your partners to ensure that if
hmm
anyone passes, and especially if one of those partners is an operating partner, right? Let's talk about that a little bit. What's your take on that?
Well, there's a couple of different things you can do. There's Keyman insurance, which is kind of just like it sounds. If there's a key person at the company, where if they could no longer work, like if they became incapacitated, that's a disability policy, which it has a similar functionality as a Keyman life insurance policy. But for there to be continuity of the business, you would want to have a policy designed that it creates enough liquidity for you to solve the issue that comes up if that person passes away or becomes incapacitated. So Keyman is extremely helpful for that. I think what you were talking about more specifically in a partnership scenario, let's say you're not super liquid, like you have a good balance sheet, but it's not like cash in the bank.
Hmm.
Somebody dies, they have 50% ownership in something that's got like a $10 million enterprise value. If you don't come up with $5 million pretty quickly there, now you're going to end up in a court or like an arbitration type of scenario where
Yeah.
different people are going to be vying for
Probate.
ownership.
Yeah.
Oh, exactly. It's a
Hmm.
nightmare. So in that scenario, there's buy sell agreements and other types of policies that are going to create liquidity for that specific purpose that you could assume ownership of that equitable stake, and then you could sell it, or it just gives you control over what happens next versus, these guys in private equity don't have a great reputation, but it's their job. If they can swoop in and buy something for pennies on the dollar, that's of course they're going to take that opportunity. That's the way the market works. So you want to put yourself in control and make sure that you don't end up becoming a forced seller or stuck in legal disputes or any of those nightmarish scenarios that are pretty easy to avoid if you just do a bit of planning.
Yeah, and it feels obvious that the businesses that are doing 20, 50, $100 million would have some of that in place just because potentially they have more resources, maybe a more sophisticated board or more sophisticated service providers like CFOs and attorneys. And I've seen a lot of scenarios where someone got sick and it moved quickly. So we found out that a business owner who had staff of 20, 50 employees, they get sick, and then maybe 3, 4 months later they've passed away. And that is such a short window to try to go set up a business owner policy or a Keyman policy or life insurance. And some people won't insure you after a certain point, so it's almost like
Right.
now is the right time to get that done.
Yes. I think what we encounter is not that people like if people who are listening to this will probably be nodding their heads like, yeah, I agree with that.
Hmm.
And then if we ask them point blank, are you going to do this? We're like, oh, well, we'll cross that bridge when we get there.
Yeah.
It's like for some reason there's a disconnect where it's very easy to, since it's not extremely urgent right here, right now, we're recording this on a Friday. We're about to have a 3-day weekend here. You think like, okay, I can put this off. It's just if you don't give yourself a deadline that you're going to do this by such and such a time, it's very easy to take that. We've got our business is worth a lot of money. We all like each other. I'm sure we'll be able to figure it out when we get there. You're leaving a lot up to chance when you don't have to.
Yeah, it's the behavioral economics,
Hmm.
behavioral finance. It's like we don't move to action for a variety of reasons. But for this video in particular, the theme of succession or not succeeding and just having policies. Because again,
Hmm.
we meet a lot of people and they say, hey, I love my business and I can't control what's going to happen and I could get hit by a bus, but I just want to make sure I'm protected because statistically, 50% of business owners are forced out the door. We call forced exits
Hmm.
because of one of the 5 Ds: death, divorce, disease, dysfunction, or distance, meaning somebody wants to move and they're geographically locked and they want to move. So if you know that 50% of businesses statistically are forced into one of these categories, and you know that death and disease are out there for, well, death most certainly for all humans, then it is the most prudent thing that you can do is start looking at this responsibly.
Hmm.
We always say if you can sell, you should sell just for those reasons. And then you add in all the risks of everyday business, right? It's almost like,
Hmm.
how do I de-risk? So how does having these insurance policies help someone de-risk?
It's a great frame. Well, I'll go on a little bit of an anecdote.
Sure.
Um, I'm sure everyone has heard this idea that the great wealth transfer is underway. Some $100 trillion worth of assets is going to go from one generation to the millennials and to Gen Z. It's missing context, though. There's like $125 trillion available, but that assumes, I don't mean to be morbid, but that, we're going to take our parents out back and just um, there could be a ton of taxation if the
Yeah.
estate plans aren't drawn up. Or people are living a lot longer these days. So let's say there's a lot more inflation and you start to outgrow some of your assets, and then you don't have a long-term care policy. So you end up in hospice care or some end of life. It could be drawn out for several years. You might rack up hundreds of thousands or millions of dollars worth of medical bills. You might not actually transfer, it could only be like 20 trillion out of that hundred something trillion dollars that they think is going to be passed down.
Mm. Yeah. Right.
This
Yeah.
is this is one of those things that it's easy to not take it seriously because you think, I have a ton of money, my kids are going to be fine. The business owner might be looking at it the same way. There's a ton of talent here. We have a bunch of standard operating procedures. We all know what we're doing. It'll solve itself. worst case scenario, someone will pick up where I left off, and this thing will keep on going. So I guess it's like a mix of sort of being optimistic that things will work out, and just assuming that since there's enough operational excellence and there's enough cash on the balance sheet that you'll be insulated from the challenges. But if that comes up and it's unexpected, and there is dysfunction or turmoil, or and if there's geopolitical issues or macroeconomic issues or the business cycle or there's a recession, it is just so much more likely that if there's a policy that creates a bunch of liquidity to at least like serve as a bridge for the next 6 or 12 months while things get set up and a new infrastructure is designed, the likelihood of the survival of your business and all of the staff and stakeholders goes up dramatically.
Mm-hmm.
So I think part of the reason it's a behavioral thing, but another part of it is it's sort of the opposite of the human spirit to think about everything that could go wrong. You don't want to confront that, so you just put it off. So if you just can sort of find a way to reframe it, that what you're doing is, we can't use the word guarantee, but making it so much more likely that your business survives and your staff do well and everything has continuity, that's why you do it.
You dropped a lot there, so I want to
Yeah.
unpack a few things. The generational wealth transfer, the great wealth transfer, that's a very interesting point, that it may not be as much because those assets, especially the liquid assets, might get eaten up just through
Hmm.
healthcare needs, and you can live longer and might need more of that money to live on. That's an interesting one. Yeah, I always go back to business life cycle. So your idea about being overly optimistic, not that we shouldn't, but also have to have some reality checks. The average business life cycle is about 5 to 7 years. So you'll have these peaks every 5 to 7 years, or dips. Same thing with financial advisors. I know we say in financial advisory, every 5 to 7 years, there's a life event, a major life event. Someone married, divorce, a new job, buy a new home. There's some major life. So we already know that there's these about 5 to 7 year windows where there's some major event that occurs. And we know that if that's happening to your business, you're going to be riding this roller coaster. We also know that there's about 4 stages of business where you raise the capital, you grow the thing, you become a mature business. Your final stage is decline if you don't start transforming and turning things around. So it should be no surprise that everything is secular and you're going to hit a dip at some point. And the best thing that we can do is ensure that we're insured and have good policies. And that's why these policies are set up, to allow us to have some breathing room when those things happen. Because when the downtimes come, and I've lived through a handful of these cycles, the last thing you're thinking about is, let's go get an insurance policy set up. You're thinking, you're
Right.
just scrambling. You're like, oh my gosh, I got to, call these people or move this money around, or how are we going to make it? And it's like the worst time to plan for that stuff. So having these types of conversations, and if you're out there listening to this, I would say first and foremost, call Geoff, because it helps to have conversations. When you have these types of conversations with business owners, what would you say is like one of the limiting beliefs that they bring to the conversation?
It's a good question. I think what you deal with most of the time, we covered it a little bit just a moment ago, but that they understand conceptually why this is important and necessary, but the roadblock is that it doesn't feel urgent.
Mm,
They're like, okay, yeah, it could be cyclical, or that could happen. You're right, I'm going to add this to my to-do list. But this week we got a ton of accounts receivable, we got money coming in, money going out, there's a lot going on. Well, give me a call back next month.
hmm
So I think that's the biggest roadblock, is it's not officially on a calendar that we are going to do this by such and such a date.
That's great. That's great. That's a good one. One thing I would add to that, and I don't know if I would call it a limiting belief, but it's a blind spot, is I think people don't, they underestimate their family, and how the health of their family will affect them as an operator and an owner in a business, and the
A great
family
point.
of their employees.
Great
Can't
point.
tell you how many times a long-standing employee, one of their spouses die, and of course, it takes them out of the game, or a child dies, or someone gets sick, and it completely takes them out of the game, and they can't think straight, and business starts to suffer naturally, of course. So it's like, we can think about us personally. And it's like, I'm the CEO, I'm the business owner, I'm going to bring it over the line. It's all on my back, but it's really not, because businesses are owned and operated by people and by humans, and humans just, I have a friend that works with addiction and recovery, and does a lot of education in that space. And you get a lot of business owners that go into these types of environments because it was addiction that took them out of the business. Or I've seen alcoholism really ruin businesses, where you had a head of sales was tanking the sales because they were getting tanked on the sidelines. No pun intended.
Yeah.
So again, kind of going back to your, it's not urgent. I think the message is it's extremely urgent. So
I totally agree. Totally agree.
So what's the starting point? If someone's hearing this and they're like, okay, all right, guys, I get it. It's urgent. All right. What do I do? Where do we start?
If we have a designated, say, 20 or 30 minutes on a phone call, or face-to-face is even better, or video conference if we can't do that, to go over what these policies are. So not a sales pitch, not even a diagnosis, but just to say, here's the way these policies are designed, here's how they work. I have long-term care on the mind, so I'll just use this as an example. I say this, it seems like a coin flip. So if I'm choosing to get long-term care planning or insurance or not, I'm thinking, am I going to need this? Mm-hmm. And that's my limiting factor. That's what I think I'm deciding between. With long-term care, the way they design these now is if you pay into it for 10 years, you can get a cash value as a surrender value of like as much as 80 cents on the policy face amount.
Really?
So that's one way to do it. So if I don't use the $500,000 I'm making available to myself by paying, say, $2,000 a month in a premium, then I can take the cash out. I didn't use it. Okay, I get my cash back. Or I don't need it. I don't want the surrender value. I'm going to flip this into a life insurance death benefit that's going to pay me out, say, $1 million when I pass away. So I'm going into this knowing that even if I don't need long-term care planning or insurance, I'm still either going to have surrender value or a big death benefit face amount that is untaxed to go to my beneficiaries.
Wow.
So the point that I'm trying to make is that you're not only insuring yourself against that Keyman or that buy sell or whatever that specific situation is, but the policies are versatile and flexible these days that you get what's called a living benefit, that you can take loans against it, or you can exchange it for something else, or you can do all sorts of different things that make these things valuable even if you don't die. So I think the first step, and we want to get it on the books that we're actually going to figure out which policies make the most sense for you. But as a starting point, just to understand, like, hey, that's a whole world. I don't know anything about it. Can someone just kind of give me the lowdown, like whether 5 or 10 different business owners in similar situations, what type of policies do they have? Can I learn about that? I think that's a good place to start. Just sort of be an observer, and then now that you got more knowledge, you can figure out which one you actually want to buy and pay and set up for yourselves.
Okay, so the first step is reaching out, setting up a 20-minute call.
Yes.
Framing where you're at, what you're looking for, whatever you're facing will be factored into options, your stage of life, right? Probably your dependents, the businesses that you own, and then you put all that into somewhat of a tailored, here, this makes sense for you, and then from there you can move forward.
Yes. So for them to understand that we can get an idea of which policies make the most sense, and then we can start to customize them and figure out which levers they can pull. Like, how can I front load this or back load this, or how can I make sure these guys are going to be okay, and how do I make sure my wife and my kids are, you don't want to get overwhelmed, like a million things happening at once. So just ease into it, have a few policies get designed, and then have somebody like myself walk you through how they work. And I think that's a good way to get started.
Sounds like a great way to get started. And it also sounds like a great way to wrap this podcast. So Geoff, thank you so much. We'll put your contact information down below. Thank you for hanging and watching this. Please like, comment, and subscribe, and we'll see you on the next one.
Thanks, Tim.